Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And we're doing a lot of different things to support that mission. These free roundtables have been happening for a very, very long time. This is the 560th session. We've been doing these since the fall of 2008, which started with an experiment of web conferencing, mentoring using web conferencing, and today everybody is using web conferencing for everything. So we have had over 200,000 entrepreneurs participate in these sessions. This event is being recorded, and every single roundtable recording is available on our YouTube channel, 1M1M Roundtable. On Twitter, we're at 1M1M, and that's Romana, and hashtag 1M1M is today's hashtag. These are the call-in instructions. Your computer audio will also work, so you can, depending on where you are, what your bandwidth situation is. We get people from all over the world, including, far corners of India, far corners of Africa, everywhere. So we are very sensitive and mindful of people's bandwidth limitations. So figure out what configuration works for you and accordingly use the technology to suit your situation. It is a roundtable, not a broadcast. So even though we have scheduled programming to begin with, you are very welcome to participate and call in, talk, weigh in. Use the public chat as well as we are going on with the scheduled programming. Please participate through public chat. We are going to start today's session with a conversation with BV Jagadeesh, Managing Partner at KAAJ Ventures. BV is a very, very well-known, very accomplished entrepreneur in Silicon Valley, and I've known him for a very, very long time. And great to have you here, BV. Nice to see you, and I look forward to catching up.
Absolutely, it's been a while since the two of us met, and yeah. This is such an amazing initiative that you have, and this is very much aligned with many of the things that even I talk about in public, as well as in many of the other speeches that I give. So it's very much aligned with what I'm also thinking. That's very nice.
So, Jagadeesh, take us through a little bit of what you're planning or doing with KAAJ Ventures, both historically as well as looking ahead. What is the vision? How are you positioning the fund and your activities currently?
Yeah, so just a little background on myself. I came to United States back in 1982, and I started my first company in 1993, which is Exodus Communications, where we pioneered the concept of internet data centers. So pretty much all of the internet companies at that time used our infrastructure in order to reach out to millions and actually billions of people around the world. And we took the company public in 1998, and we scaled almost to $1 billion within about 6 years after we started the company in revenues. And in 2000, I left Exodus to start NetScaler. And NetScaler, because of the post.com crash, we went through lots of ups and downs. And after re-navigating the company, we managed to scale that company as well and got to a stage where we were almost like $60 million in revenue. And we got an offer from Citrix at that time in order to scale the company to the next level. So today, NetScaler is almost like over $1 billion plus in revenues for Citrix, and it's one of the main cornerstones for Citrix product lines as well. So I'm very proud of all the work that we have done and the jobs that we have created over the years. So with that experience, and then later on, I tried one or two companies, and interestingly enough, one of them was a very high risk kind of a company called Three Leaf Systems, and because of technology challenges and market challenges, we actually failed in that company, and that was a great learning experience for me So I have success, I have failure, which has helped me to learn both sides of the coin as well. And using that, I just wanted to apply my experience to invest in next generation of entrepreneurs rather than myself getting involved in yet another company. So because of my infrastructure and enterprise kind of a background, I've been primarily focused in investing in next generation of entrepreneurs, building these enterprise infrastructure companies or enterprise software companies. So that has been the primary focus over the last 10 years.
And what what stage do you like to get involved in? Are we talking, since you first started doing this, or I first started doing this, the industry has evolved quite a bit. Now, of course, people are doing pre-seed, seed, post-seed, pre-series A, small series A, large series A. It's like the whole segmentation has happened. Where are you playing? What's your comfort zone?
Most of my investments that I have done are all, treat it like a seed investment, right? I've been the first person to write the check for many of the companies. Companies like Net Magic Solutions in India, where I wrote the first check, or over here, a company called Yodlee, which went on to become IPO as well. I was probably the very first guy who wrote the check, being inspired by the founder. So it's also interesting that you talked about this pre-seed, seed, mini seed, small seed, and all of that. So what we have done in the last 1 year or so, a bunch of us who worked together in the past, we have come together to start a seed fund, kind of it's not a real fund because we don't really have any fees, or we don't really have any carry. So a bunch of angel investors, we have come together, and it's called SV Quad, Silicon Valley Quad. And we want to invest, think of almost like a seed plus, where we want to invest up to $3 million. And the purpose of doing this is that as I was doing, these seed investments, I kind of realized that a lot of these entrepreneurs, half the time they end up actually spending to raise money, because whatever the seed fund that we give is not adequate enough for them. And as the company starts to pick up momentum, the entrepreneur has to be continuously on the road to raise the money.
Yeah.
So we felt that, based on the experience that all of us had, we felt that if we can give enough money for the entrepreneur so that he or she focuses primarily on building the business to an extent where it is significant enough in terms of revenues, especially like what you're saying, million entrepreneurs with $1 million revenues. And if you can get to that $1 million plus kind of revenues, it becomes much easier to do a Series A or a Series A plus, or whatever that is, right? So this way, the goal is that our money, the money that we are giving, which is $3 million, should last for about 24 months. And the entrepreneur essentially must have a story to start to pitch by the 18th month, because it takes about 3 to 4 months to raise the money. So that means by 18th month, you should have got to a stage where you have, this kind of revenue, $1 million or $2 million or whatever that is, with some marquee customers and with a good management team. And that really will help the entrepreneur to raise the Series A. So we have now upped our game to invest up to about $3 million. And we do about eight investments in a year.
Okay, great. So in terms of geography, you said you have invested in India, you've invested in Silicon Valley. What is, your group's investment thesis vis-a-vis geography? I understand it's enterprise, I understand it's deep tech, enterprise tech kind of stuff. What about geography?
Geography, primarily because of the fact that I like to spend more time with the entrepreneurs, and because of the fact that I live here. I like to do more companies out of Silicon Valley, although
Okay.
my heart is still in India, and I like to help entrepreneurs in India as well. So I do, at any given point of time, I do have about 2 or 3 companies in India. And I just want to limit myself with that, because otherwise it starts eating into my morning times and evening times, which is very important to me for my own other activities that I have. So because of that, I limit my India investments to about 2 or 3 companies, and then the remaining whatever companies that I've done, both through KAAJ Ventures and now through the Silicon Valley Quad. Silicon Valley Quad is primarily centered around investing in Silicon Valley-based companies or US-based companies.
Now, I want to comment on this India Silicon Valley corridor. If you're investing in enterprise-facing companies in India, most of them are operating in a SaaS business model. Most of them are doing global tech. Most of them are trying to get into the American customer base. So eventually they become Silicon Valley companies, or at least soon enough they become Silicon Valley companies. That's what you're facilitating anyway, right?
It's very true. It is very true. But the good news is, because of the fact that unlike 10 years ago, India today is also a destination market for many of these companies. So both on the enterprise segment as well as on the media and internet-centric kind of companies, there are enough number of companies for these enterprise products to actually experiment and then win those customers. So this way,
yeah.
in the beginning, right, the first 20,
Yeah.
30, 40 customers,
Yeah.
you just focus on the Indian market and get your product completely stable enough.
Absolutely. Absolutely.
So that later on, when you move to the US, right, you're not debugging your product at that time.
Right. Now you can get to $1 million ARR with Indian customers. We see that all the time in our, ecosystem.
Yeah, not in all segments. Not in all segments.
Not in all segments. No, not in all segments.
But in some of the segments, definitely you can get to. Yeah.
Yeah. Okay. And now talk about these companies that you've invested in, whichever, maybe 2 or 3 or 4 case studies where tell us about how you met them, what you saw in these companies, what did they have that prompted you to write the check, so that we can get a little bit of a feel for how you think about these companies and what really captures your imagination.
Yeah. So take, for example, Nutanix. Nutanix is one of the companies that many of you know that went public about 3 or 4 years ago, and they have pioneered in the concept of hyperconvergence. And the founder, Dheeraj Pandey, he basically approached me through a investor that had already put some money into the company, and that's how I got involved. And he is very smart thinking, actually, early on itself, because he was a first-time entrepreneur, and he wanted to surround himself with people who have been there, done that kind of thing, so that he wanted mentors who can help him guide through this whole journey. And that's how I got involved with Nutanix early on itself, almost like in 2011 timeframe. And another company which is currently...
One second, Jagdeesh. When Dheeraj came to you, he was a first-time entrepreneur. What did he have? I mean, there are so many first-time entrepreneurs coming to you. What did Dheeraj have that convinced you that was different and that was special? Dheeraj, of course, I know Dheeraj. He's a very special entrepreneur. He's done a fantastic job. But when in 2011 he was starting, what did you see in him that showed you that spark?
I think basically what you look for in an entrepreneur at that stage, right? Because product is not there, team is not there yet, and customers are not there. So what you look for at that time in the entrepreneur is a clarity in the vision of the product that he or she is building, and the market that the product is going to go after, and very good clarity in clearly understanding as to why you are solving this problem, and what differentiates you from many of the other products that exist in the market, right? And in his case, it was very clear that given this whole hyper convergence of bringing compute, storage, network, all of them into a single environment. And the example that he took was centered around this whole Google file system. And Google has done it itself because they have thousands of engineers who can make that thing work and then scale it. And his whole thesis was that a solution like that is equally important to an enterprise that don't have all those type of resources. And Nutanix will become that company that simplifies the way how a concept like a GFS can be brought into the enterprises, right? And that was the selling point. So which means you now have a key differential in the product that you are building with either a NetApp or EMC, which all were doing in a very traditional manner back in those days. And here is a brand new thinking, and the team actually understands how to build this product, and the market seems to be pretty intuitive, right? And now it's a matter of building the product, and it's a matter of figuring out how to find the go-to-market, right? And that is where the team actually excelled in figuring out the early market adoption of this whole VDI space, the virtual desktop initiative space, right? And that became their early market, which is where they penetrated, and then they slowly started to scale to all the other applications within the enterprise.
And very early on, you had enough confidence based on your discussions and based on Dhiraj's background that they could build this product.
Absolutely, absolutely, yeah. You know, given his background and his other co-founders' background, Mohit Aaron and Ajit Singh, very evident that these guys really understood how to build this complex product.
So, you know, the journey that you are discussing is the journey of a first-time entrepreneur doing a fast startup. Nutanix was not a lean startup per se. So that's a space where I think first-time entrepreneurs always have difficulty. So it's great to hear the Nutanix story and how the role that you played in enabling him to get to his next level. Because we always hear that, oh my God, it's very difficult to raise money for a fat startup where I don't have the money to hire the engineers to build this product. It is going to take some money to build this product, but I'm a first-time entrepreneur. No one wants to invest. This is a recurring theme. This is one of the biggest themes you'll hear in the industry.
Yeah, absolutely. I mean, there is another company that I have funded, again, in the cloud space, which is a current company called Tetrate, which is also equally complex product as well. And these founders came from Google and from Twitter, who have sort of built an open source kind of a product. And this company is called Tetrate. And Tetrate brings this whole load balancing, which is the NetScaler product line that we had built, into the cloud, given the complexity of how the applications that run in the cloud today, especially in multi-cloud sort of an environment, including running within your own data centers, and how do you balance the load across these applications? And these guys had developed and they had built the open source kind of a product. And that's what gave the confidence to me to be involved with this company. And it's fascinating to see how much interest is there amongst the investment community to invest in this company, as well as the customer base as well, and how methodically these guys are executing in terms of winning the early set of customers and then expanding that into a next set of customers. Really very simple entrepreneurs, but with clarity to the core in terms of the problem they are solving and the markets that they're going after.
And so they went to market in the beginning as an open source product and already got a bunch of customers?
So these guys had built the open source as part of Google and Twitter. So they were the original builders. And then they thought that a product like that is important in the enterprise segment, right?
I see.
With more functionality associated with this product. And at the same time, even the open source that many customers are using needs support as well. And it requires very, very high caliber and high touch kind of engineers who can support that product.
So that go-to-market strategy of something already validated with an open source model is very attractive to VCs these days. I've talked to a number of VCs who are looking for that kind of businesses. So
exactly,
yeah, that is
exactly.
Very good
in fact, now the company is very clearly executing on the strategy that we talked about almost 2 years ago with the team, where you support more and more of these open source adapters, and at some point of time you start switching those customers into this enterprise product that the company has built. So now you will have validation with your existing customer base, providing an open source support, and at the same time, because you have a relationship with the customer, that you can start expanding, right, by selling to the same customer about all the enterprise functionality that the company has built. So now you upgrade the customer, right, to the enterprise product the company has built.
Yeah, very good. Excellent. Is there one that you have done from India that you would like to discuss a little bit, just to understand the process and the nuances of an Indian company working with you?
Yeah, absolutely. Absolutely. So let me take an example of a company called Flutura. So these Flutura guys, they used to be employees of Mindtree. And at that time, they approached me through some common connection. And they hadn't even started the company at that time. And they were really thinking of getting into this whole analytics space. And analytics space in heavy industrial engineering areas. So because of the complexity of the equipments, right, when customers are investing millions of dollars, especially in oil and natural gas or large scale manufacturing and so on and so forth, identifying the parts in these equipments early on through these analytics, right, that machine to machine learning kind of a thing. So these guys, even though they came from a services background, but they had the ambition, they had the desire to get into a product business. And at that time, I was also very keen on supporting these Indian entrepreneurs who were looking at building these enterprise class product companies. But I knew going in, I knew there is going to be a challenge with these entrepreneurs because their whole background was services background.
Services, yeah.
And people coming from services background and adapting that into product building is a very complex thing. I mean, just to give you a simple example, they did not even understand at that time the role of a product management, because for them, from a services background, right, they think that they understand what needs to be done. That's because somebody else, the company that is giving them the business, has done the job of the product management, defining the product functionality, defining the roadmap, and understanding who the early customers that you want to go after, and so on and so forth. So bringing the need of the whole product management thinking and getting them to understand that, and then slowly focusing on certain markets rather than boiling the ocean kind of a thing. So guiding them in the early days, the importance of the focus, the importance of figuring out what markets you want to build the product for. So it's been an interesting journey. And as you said earlier, we had to move that company to the United States almost like 3 years ago or so, because this is where the market for a product like that. And we did have some initial success in India, but majority of our success is now coming primarily from the United States and European countries.
You know, Jagadeesh, this bootstrapping products using services is a theme that we've done a lot of work on in 1Mby1M. We have case study after case study of really successful companies, but it requires focus and it requires commitment to becoming a product company.
Exactly.
And however, this dichotomy of first-time entrepreneurs trying to build a fat startup where product building requires, investment, bootstrapping using services is one way that people are bridging that gap very successfully. We're seeing this constantly.
It is, because what happens is, for a first-time entrepreneur, fundraising is a major issue.
Yeah.
Right? Because nobody wants to give the funding. And at the end of the day, the entrepreneur has the dream to build his or her own company. I mean, that was the case even for us, right? As first-time entrepreneurs in 1993, when we started the company, there was nobody to fund us. So what did we do? On the side, we started a services company.
Yeah.
And the money that we saved out of that is what we invested in Exodus Communications. And then once we got to a stage where we were about $3 million in annual revenues is when the interest from investors actually got created. And that is when the funding happened for us.
Yeah. So I'm very happy to hear this from you, that you have experienced that, and I experienced that as well in my early journey. And I purposely, because we based the whole program on case studies, this theme of bootstrapping using services kept coming up early on in our journey with 1Mby1M. So then I really looked into that very carefully and, basically put a methodology together of how to do that and how to train people to do that. So now, we see this all the time. We have at any given time in our ecosystem, there are tons of these kinds of companies.
Yeah, I mean, my advice to these entrepreneurs who are coming from services background into the product background is definitely doable. It is a little bit of a mind shift that they have to undergo, and make sure they emphasize on the importance of the product management and the focus of few markets that you want to build this product for, especially in the early days, right? Don't go try to boil the ocean. Don't go to every market. So it is that very clear focus, because in services business, it's almost like, okay, anything, bring them
whatever
on.
Comes.
Whatever comes, I will take it. It doesn't matter whether you are financial industry or manufacturing or healthcare. I don't care, right? I'll take on any product because somebody else has done the work of bringing it to the market. So here you have to really think very clearly that I have to focus on what market I'm building this product for. And that is where the exercise that they need to go through. And clearly, I think we can build fantastic companies because you don't really have to depend on early stage investments.
Right. Well, I think the other thing that we see as problems, recurring problems in those kinds of companies, because technology is the comfort zone, people build all sorts of things. But really, you need to build one thing well and sell it a lot. They build something for here, something for there, and all of them they start calling products. But you don't need that many products. You shouldn't be doing that many different uncorrelated things. You should be doing one thing and one thing well and selling that one thing to lots of customers. That's how you become a product company.
Exactly, yeah. I actually teach a course on entrepreneurship, and I encourage especially the entrepreneurs who are coming from services business. So twice a year, we offer that with this incubator that we have called FalconX. And ask them to subscribe to that and get the information about when the class gets offered.
Yeah, and if you need additional material on that, we have published our bootstrapping using services course on Udemy. It's very inexpensive, and you can use that as well if you like. Lots of case studies.
Yeah. I mean, my whole goal, right, is to help these next generation entrepreneurs so that
Right.
they don't need to make the mistakes that we made. Let them go make new mistakes.
Yeah, absolutely. All right. Well, very interesting conversation. Let's listen to an entrepreneur next.
Very nice. Look forward to it.
Folks, a little bit of background and expectation setting for those of you who are either pitching today or in a later session. This is a safe working session. There is no other. This is not Shark Tank. We're not here to entertain people. This is a safe working session. You can share whatever you need to share. We'll have a candid conversation. We may say things that you don't want to hear, perhaps, but if we see things that need to be pointed out, we will point those out. And it's possible that you may disagree with feedback you get, but please listen and please consider the feedback before you make your decisions. Ultimately, it's your company. You will make all the decisions, but you know, you are getting feedback based on experience. So Nilay Khadepau is our first entrepreneur. Nilay, could you please
Yeah,
unmute your
hi.
line?
Yeah, hi. Yeah,
Are
can you
you
hear
on
me?
video as well?
Yeah, I'm on video. Yeah, can you see me?
All right, perfect. Go on. Go ahead.
Okay. Yeah, so I'm Nilay Khadepau, and today I'm going to take through the data plans journey. Uh, Along with me, we will also have Surojit Mukherjee and Indranil Paul. I think they probably are in the attendees, so they would probably pitch in as and when needed. So I hope they can unmute and speak, right, if required.
It's
That should be.
Maureen. They will need to be panelists if they want to speak. There you go. Both of them are panelists. Both of them should be able to speak.
Okay,
Surajit,
no
just if
problem.
you can unmute and
Yeah.
speak. Maureen will work on Indranil as well. Go ahead.
Yeah, just to check. Yeah. Okay. So now they are panels. Yeah. So today we are going to take through the data plans journey, and it was very insightful when I heard from Jagdeesh about his initial days. They started as a services, and then got some funds, and then venture into products, and that's I mean that's something that a lot of people and a lot of us also have in mind when we started this. So I'm going to take through some of the ideas and some of the plan that we have and some questions that we have at a later course. So can we go to the next slide? Yeah. So Dataplant, we started in 2018, roughly with the concept of getting sourcing all the data, all most of the data from customers. Trying, we have we like new age technologies into IoT and IIoT, into the analytics world, where we will use the artificial intelligence and offer cloud computing solutions on analytics using customers' data. So this way we will be enabling the digital transformation, and then subsequent actions can be taken using the machine learning libraries that we have built, and we are using adapters that we are using, and that will help to quickly take us to the decision making process and solve the real life examples. So that's the main agenda here. So what we have today in analytics platform that we have built, the center of this is the analytics platform. We have built this with a vision to expand it using our AI ML backbone that we have. This platform is going to optimize the cost for other customers sourcing their data inside, and they need to take some meaningful analytics. We are also providing enriching the customer experience, and the three major type of analytics that we offer are descriptive, predictive, and prescriptive analytics. So this is the whole platform that we have built initially, and the left side on the bottom that you see, this is what we did for as a services. We started this to build a platform for one of the Caribbean-based group. So they wanted to source their data and to be able to use that as a standalone analytics platform and offer insights to the customer's data. So that was their whole objective. It was like a B2B enterprise customer, and they wanted to
Let
use
me
their.
Let me
Yeah.
facilitate your presenting this because, okay, you built an analytics platform in a services, using your services revenues. Who are the customers that you have worked with? In the services mode, what kind of customers have you worked with and what kind of use cases have you solved for?
Okay, so for Dataplant, do you mean the services that we have worked?
Yeah, for your company, yes.
Yeah. So this is one of our customers. We are a lean startup right now. We haven't expanded
Do you have a
significantly, but
customer or not? No, I don't want to know whether you're lean startup or not. First and foremost, do you have customers or not?
yeah, we have the one on the top. We have a hospital management system that is NH Group. We have a customer, so they were using this platform. At the moment, that's not the case, but that is one of our customer that was using this platform, the hospital
Okay.
management system.
Is that the only customer you've had, or have there been other customers that you've worked with?
We worked with Caribbean-based customer, and right now we do not have him, but that was our initial starting point to develop the platform.
Okay. All right. So you
Shravana,
have built a platform, and you have had worked with a few customers here and there. That's the crux of the story, yes?
Yeah. Maybe Surajit, you want to add something?
No, I was just trying to strengthen what you were saying, that we had these two customers only. One was the Narayana Specialties Hospital run by Devi Shetty, and the other one is the name of the customer is Dizia Solutions, which is based out of the Caribbean, out of Barbados to be more specific. And we started off with some initial queues, and we had some relations with these customers in a way. They had the confidence of providing this opportunity to us. We took up this opportunity because we knew we had to enter into this business, and that is where we actually quickly built up the first phase of our solution, which is by no means the ultimate, the best thing that we would love to do. But now going further, what we have on mind is to actually evolve that into a much better, much more superior platform, and that is what will be the heart of our solution, which you can see here in the in this diagram in blue in the middle. So that's what I was trying to say. Thank you.
Yeah.
So I'm going to give you a few comments, and I'm going to turn it over to Jagdeesh to give you his comments. First and foremost, if you're trying to build a platform company like this that will cater to 1, 2, 3, 4, 5, 6 different verticals at the very beginning, that doesn't work. There's a pretty tried and true strategy in our business in building enterprise software companies where you pick a use case, pick a vertical, pick a use case, and kind of start productizing on a solution that you can go to market with and get customers for. And it doesn't matter whether you get them in a services mode or whatever, but you have to immerse yourselves in customers based on clarity on a thesis on what problem are you going to solve. And the problem I have with what you're showing here is that you're a pure horizontal platform that you've built for 3-4 years without really working with customers. And I think that is a mistake. That's a strategic error in how to go about building companies like this. You have to fix that very soon. Otherwise, it's not going to move in a direction. This company, I would say this company is not fundable right now, given what you've presented. Jagadeesh, why don't you weigh in?
I think it's an excellent point that you made. So the way to look at Nilay and the rest of the team is you should have a vision that perhaps could be very big. Obviously, it has to be very big. But you nail this down to what we call as the minimal viable product, which is the MVP, right? And the vision could be this platform, but platforms are not sellable. You have to build an application for certain markets, right? That is what customers are looking for, because they don't have the time and resources to deal with yet another platform. So if you can identify, based on the platform, building an application that solves a specific problem for one or two markets, which is large enough in the beginning, that should be able to give you maybe $5-10 million of ARR revenues, then you have an opportunity to start penetrating, as Shramana was saying. Otherwise, you will be trying to boil the ocean. Whatever, any amount of money that you have is not going to be adequate for you to penetrate. So that's point number one, which is basically, to summarize point number one, have a vision, but nail it down to an MVP which addresses a specific problem to specific areas of the market, and have a very clear idea, right? Who my customer is, why is this customer going to buy my product? Point number one. Point number two, from my experience of working with these analytics companies, is that it actually eventually starts turning out to be more like a nice to have product. The analytics product will become more nice to have product. I mean, I've had 3 or 4 experiences in this area. In fact, one of them was even funded by Sequoia Capital later on as well. The challenge with these companies is that this analytics is an interesting thing because it looks like a nice dashboard and all. But I think ultimately you need to build action-centric thing, meaning you have to have some sort of a control in helping the customer to automate and then fix the things, rather than just telling the customer, hey, this is what is happening within your enterprise or within your retail, and I will leave it to you as to what decision you want to take. So there are lots of products that are available that way, and it's hard, it just looks from a customer perspective a nice to have rather than a must have. And I think identifying the market, the problem you are solving, and if you can get to beyond analytics to even take some action to go fix it, I think then you will probably start seeing good traction in a larger market opportunity. That's my 2 cents.
And then also, on top of that, you're going to need to really understand the competitive landscape. The whole AI, ML platform, IoT platform market is extremely crowded, and a lot of people are solving actionable analytics, as Jagdeesh is pointing out, on those platforms. So you need to understand what are the strategies, who are the players, what are the strategies of those players, what actionable problem are they solving, and so on. So there's, you're not inventing this space. This is an old space. A lot is going on, a lot has already happened. So you're, in acting like you're starting this space, and you're acting naive, I would say. So you're going to have to, it's in your MVP, you have to have a market entry strategy that solves the problem and can go talk to very specific customers who have that problem. So if it's in potential customers in banking, financial platform, e-commerce, healthcare, telecom, this is complete boiling of the ocean. It will not work. This is not going to work.
Yeah, I get your point. I think very good insights. You mentioned that we have to go in a agile way. Maybe like we have a vision, but we need to start with a small MVP that would focus on a targeted problem, right? So that was how we intended to, but there were a few hiccups. I mean, we did not get the support from the services company that we were working for, and then we had to shift our ideas that we had, start working on some patent process, and also look at certain designs to to be able to take that to as a adapters. Like platform is one thing that we wanted to create, and then we wanted to add adapters to that. One of the adapter was the healthcare, and the other was the in the image analytics, and we also had home automation has another adapter. So that was how
Yeah,
we
but
thought
again,
about.
this is all bad product management. What you're doing is very, very poor product management. This is not how you build a successful company. Product management is prioritizing and focusing and really positioning a company and executing against that positioning. So I kind of glanced over your 6 questions here. The net answer from 1Mby1M is you are not fundable. If you join 1Mby1M, do not join with the expectation that tomorrow I'm going to send you to investors. You're going to probably spend many, many months working on strategy and really repurposing and positioning your company, fixing your product management, so forth, before I will send you to any investor. So join 1Mby1M with your eyes wide open. I'm not going to misrepresent that you are ready to be funded. You are not fundable right now. And we don't send anybody, any company, to investors who are not fundable.
Okay, fine.
Okay?
Yeah.
All right.
Surajit, Indranil, you want to pitch in anything or?
No, that's absolutely clear. I mean, I also pick up very positively the messages coming out from there. And Sramana, thanks a lot. I have spoken with you earlier also many years ago regarding a transportation use case. And this was just a continuation of that. So you can see the ANPR and the OBD, etc., all those things we considered as part of our product roadmap. So we have a roadmap which is driving this. But I take your concerns and feedbacks very positively. Thank you.
Okay.
Yeah, thanks.
So just to summarize, I'll give you an idea about how to work with 1Mby1M very quickly. And Nitin, just hold on. I'll come to you in a moment. And we'll do Q&A and more conversations after I summarize how to work with 1Mby1M, since that has already come up. If you like, by the way, the candor with which we approach the mentoring process, please refer 1Mby1M to other entrepreneurs, other serious entrepreneurs. I'm not interested in sugarcoating the feedback. We need to tell you what you need to work on and what you need to fix. Otherwise, we're just giving you pats on the back, and that's not why you come here. It's absolutely useless. So if you want to work with us, everything is at 1Mby1M.com. It's completely a virtual accelerator. You can find a free blog. You'll learn a lot, but just by following the blog. The Entrepreneur Journeys book series is actually a very interesting starting point for your learning journey as well. There is a book, a case study-based book in the Entrepreneur Journeys series on bootstrapping using services. Right from the beginning, actually, we identified bootstrapping using services as a way of approaching the market and succeeding, navigating the funding gap for first-time entrepreneurs doing fast startups. So it is a theme that we picked up very early, and we put a book together, and we have a very large module in the curriculum, in the 1Mby1M curriculum, that addresses this topic, and there is now a Udemy course on this as well. So if this is a topic that is central to your, existential process as an entrepreneur, you have lots of resources to draw from. These roundtables happen every week. This is the 560th roundtable. You can come as many times as you want. You can pitch once for free. And then if you really want to, have an ongoing discussion, join the premium program, and that's where we do the real acceleration work. On a week-by-week basis, we work with you, we help you we have a terrific curriculum that you will be able to use in an asynchronous mode, but you also have synchronous, this kind of discussions every week. And we do help you with financing. We have hundreds of investors who work with us. However, we never, ever misrepresent or lead you on to believing that just by joining the program, you will get introduced to investors. That does not serve your purpose. That does not serve our purpose. Just let's say I can introduce you to 100 investors. Let's say I introduce you to 100 investors and you get 100 rejects. What purpose does that serve? It doesn't serve your purpose. your morale is going to be shattered, and it doesn't serve my purpose because my credibility is going to be shattered. So that's not what we do. You're going to have to, if you come here, come with the expectation that you're going to have to work with me, and I will get you ready for financing if you have the ingredients of financing in your business, and then I will send you to investors. That's how we work. The self-assessment on the website is a free tool. It's the investor due diligence questions. Go check that out. Ask yourself those questions. See if you can answer those questions in a compelling, decisive way. If not, you have work to do. The bootstrapping course, the free bootstrapping course that's on our blog, is less than 1 hour. It gives you a very good overview of bootstrapping principles, many of them that we use, and the philosophy that we use. And there are a lot of courses on the 1M1M methodology now on Udemy. This is work that we've done very recently, since last spring, and we've managed to put a lot of courses on Udemy, and now we have thousands of students on Udemy who are using these courses to, to learn basically the early part of their journey, and we've really managed to price this at an absolute rock bottom level. So this is part of the democratization of entrepreneurship education that we are committed to as 1 million by 1 million, and Udemy has 50 million users, and our hope is that those who want to learn entrepreneurship in a significant, granular way can use this material and advance their agenda. You can find the entire 1 million by 1 million curriculum also without joining the premium program with 1 million by 1 million basic. And that's just $99 a month. Again, rock bottom pricing. You can't get anything cheaper than that at this quality level. This is an incredibly high-end material. We have thousands of case studies, many hundred unicorn entrepreneurs, many hundred VC-funded startups, many hundred bootstrap startups, and all this, the entire methodology, entire curriculum is built on case studies. So go dig around on the website, figure out what you need to, what you need to help your journey, help your learning journey. There are FAQs, video FAQs, a curriculum description. The entire curriculum is case study based. The policies for investor introductions are clearly articulated. Our philosophy is don't go to investors as beggars, go as kings, which means that you're going to have to do some work ahead of time before you go to investors to achieve the level of clarity which makes funding happen. So that's it. I have more entrepreneurs to work with, but in terms of scheduled presentations, that is all. There are free roundtables every week. We are right now completely, functional and working, no holidays, no breaks. So sign up if you need time to pitch and discuss for any of these roundtables. Jagadeesh, thank you very much for interacting with Nilay and the team and offering your feedback. I'm sure it's very inspiring for them. I have one more entrepreneur to work with, which is more on coaching him on some term sheet issues. So you should feel free to drop off at this point.
Okay, thank you. All right.
Thank you for coming.
Bye.
Bye.
Thank you, Jagadeesh. Thank you.
Thank you.
Nitin, I saw your questions. Again, you had the recording available in the private roundtable yesterday and this one. So I'm going to tell you exactly how to think about valuation and term sheets. And you may have to go over this a few times to fully grasp it, okay? So you can, in your situation currently, we are looking at raising $3 million at a valuation of $5 to $7 million. So $5 to $7 million is your pre-money valuation. $3 million on top of that puts your post-money valuation at $8 million to $10 million.
Right.
There are three components. There are three components in how the term sheet is going to be structured. There is the new money, which is that $3 million. There is the option pool, and there is the founder shares. So the founder shares is what you and all the other people, key people who are already on the team are going to be getting. Then you have the option pool, which is for future recruitment. And then there is the new money. These are the three broad components of your term sheet. So now ask me, you said you got confused and you quoted some incorrect numbers. Ask me what is the confusion, and I will try to clarify by dialoguing with you.
So, first of all, good morning, ma'am. So what happened exactly is that, please tell me if I am correct or not. So if we are raising 3 million USD, then valuation is around 5 to 7 million USD, and post funding valuation is 8 to 10 million. So do I understand this correctly?
Yes, that's correct.
And if we raise 7 million, and how much does the pre-valuation come out to be like, and post funding valuation is how much?
If the pre-money is 7 million, the post-money is 10 million. So it's the 3 million added to the pre-money is the post-money valuation.
No, if we raise 7 million, ma'am.
If you raise 7 million,
Yeah.
the kinds of people you're talking to, I don't think you can raise 7 million.
No, but that is what they were asking. So what happened today that when he
I
asked,
see. So they were asking if you raise 7 million, what would be the valuation?
yes. So when I said, I replied that valuation is 7 million. So and I am raising 7 million. So then he ended up saying this, that then company would be then you will be out of the company.
No, that if you cannot, no, if you raise 7 million, the valuation, the pre-money valuation will have to be about 12 million.
Yeah. So is there any framework or so, because I have studied.
There isn't, but the basic framework is that you cannot, that investors, it's not in investors' interest to dilute the founders so much that they don't have any incentives in continuing to work on this.
Exactly.
So typically, we don't raise money at levels where the founder gets too diluted. And you have to also leave room for further fundraising such that the founders don't get so diluted that they are, basically out of the company.
Absolutely.
Okay, so 7 million on 7 million you're going to be giving up too much at this stage. If you raise 7 million on a 7 million valuation, it would be too much. That valuation is going to be too little.
This was actually, it was the confusion, and it I could not answer it in today's discussion actually.
That's okay. You're a first-time entrepreneur. Investors understand that. You're a first-time entrepreneur. You haven't raised money before. It's okay. And
I also wanted to know one thing, that when will I need to raise the balance 4 million if we raise 3 million now? So what should I?
If you raise 3 million now, I would complete the team and get further with the revenues, and then raise the other 4 million maybe in 9 months or so.
Okay, got it.
So if you raise the first 3 now, in the fall you could raise the other 4 at a different valuation, not this valuation. If you raise the 3 at a 5 to 7 million pre-money, you would raise the other 4 at a 12 million pre-money probably.
And we will definitely hope to achieve the milestone also. So whatever the milestone we will set, we will achieve the milestone also.
That's right. That's right. So what you need are lead term sheets at this point. You need a lead term sheet from Mumbai Angels. You need a lead term sheet from Abhishek Rungta and company. And he's going to work with other investors. He's already said that he's going to work with other investors and pull together a group of people, funds to pull the full money together. Indian Angel Network, you should try to get term sheets from, and all the others, whoever else engages, you should try to get term sheets from. But a lead term sheet is important. If you have a lead term sheet, there are other angel investors that I can also send you to, many other angel investors.
So I have already updated the Excel also, and I've renamed it also. So,
Okay.
whenever you get time, you could look at it.
I will do a round of follow-up, sure.
Yeah, sure, ma'am.
Okay.
So should I need to follow up with them, Mr. Abhishek, or you will have word with them?
You should tell Abhishek that if you raise 7 million now, the valuation is not going to be 7 million. But I think if you raise 7 million now, then we'll have to go to a 12 to 14 million valuation to preserve enough equity.
So I'll convey this message to him.
Yeah, that's fine. He knows that, but you can also underscore that. So the 5 to 7 million valuation is if we raise 3 million now, and then we would raise another round later in the year, probably in the fall, at a $12, $14 million valuation.
But yet I don't know their response that they're gonna be investing in it, or so they understood it, and I explained everything to them. So I do not know what's their feedback about it.
No, you don't know that yet. They will come back to you. They will let you know their feedback. But I think this is a point that, since there was confusion on this point, you should get back to them and let them know that this is just a clarification. That will probably, if we raise 7 million right now, we will have to go to the 12 to 14 million valuation level now. But if we raise 3 million now, we can do it at a 5 to 7, and then raise again, in the fall at the higher valuation.
Understood.
Just clarify that point. Just say that, I'm doing this for the first time, and I had some confusion. I talked to Shravana
right. So, and one more thing, I ended up saying that maybe after raising of 7 million, we do not need further funding also, because we have been cash positive and EBITDA positive company since last 7-8 years. So I don't know how it happened, because
that's fine.
I know
that's your choice. That choice will remain. So after raising 7 million, if you are doing great, we can decide next year after, we can decide whether we want to raise more money or not. We don't have to commit to one way or the other. You can just say that we can, be cash flow positive and break even and everything with 7 million. And if we decide that we want to grow faster and raise more money, we would be able to raise more money because the numbers are going to be great.
Okay. So I was worried about this point also. Thank you so much for the clarification. Thank you so much, ma'am.
You're very welcome.
Yeah, thank you.
All right. Anybody else? Any other questions, comments? Anybody wants to interact? Yes, no? So if anybody has questions about the program, Irina Patterson is your contact. And I think that is it for today. I will see you next week. Bye.
Bye-bye, ma'am. Thank you, ma'am.